Ladies and gentlemen, good day and welcome to Q1FY22 Earnings Conference Call of Subex Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. G.V. Krishnanath. Thank you, and over to you, sir.
Thank you very much. Good afternoon to everyone who have joined the earnings call for the period ended June 30th, 2021. Now I'd like to introduce the members of the management who are present on the call. Along with me, I have Mr. Vinod Kumar, Managing Director and CEO, Mr. Venkatraman GS, Chief Financial Officer of the company. I would like to start the conference call by going through the safe harbor clause. Certain statements in this call concerning our future growth prospects are forward-looking statements which involve a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. The risks and uncertainties relating to these statements includes but not limited to fluctuations in earnings, our ability to successfully integrate acquisitions, competition in our area of business, client concentration, liability for damages in our contracts, withdrawal of tax incentives, political instability, unauthorized use of our intellectual property, and general economic conditions affecting our country. So with this, I now hand over the call to Mr. Vinod Kumar to take it forward. Over to you, sir.
Thank you, Krishnakant. Good afternoon, everyone. Thank you all for taking time for this call. I hope all of you and your families are safe and doing well. We have faced tremendous challenges in some form or other during this pandemic. After going through a very difficult period with about 150 Subexians infected and out of action for the bulk of Q1, things have definitely settled down. Most of them have recovered completely and resumed work. We also have over 60% of our teams based out of India fully vaccinated. We hope that the rest of the team members will also get the vaccination done and completed both the courses during the course of this quarter. As you would have seen from the results announced yesterday, we reported revenues of 80.6 crores, EBITDA of 16.2 crores, and PAT of 13.5 crores. While traditionally Q1 tends to be lower than the average quarterly revenues, the delays on account of project deliveries caused by pandemic negatively affected our Q1 revenues. Talking about the project delivery delays, the main reason was that several of our key team and managers were out of action almost for 4 to 8 weeks. Further, we could not start some new projects in certain geographies due to COVID-related lockdowns and customer non-availability. We also had a couple of cases where the customers who recently placed the order on us wanted to migrate to Hypersense platform, and hence we had to redo the SOW, which again took time and therefore delay in initiating the project. The good part is that things have streamlined, and starting July, deliveries are happening in full swing. Now, Hypersense continued to create momentum, and as we talk, we have 3 customers who are where the Hypersense platform is under implementation. The AI Studio, which is a very key component of the Hypersense, is particularly generating a lot of interest as it provides customers a tool to fast-track AI ML deployment and adoption within their organization. Internally, the activity of porting fraud management and revenue assurance product onto Hypersense platform is also progressing well. We expect all upgrades and new customers going forward will be on our new Hypersense platform. Coming to the new areas, the new GTM approach of going via distributors and channel partners have significantly increased our reach when it comes to IoT/OT security. we are focusing primarily on the critical infra and industries, manufacturing industry segment based on the current hype of cyber activities, cyber threat and cyber activities that we are seeing in those segments. The implementation cycles are much faster compared to our traditional project timelines. And post successful implementation of the initial phase, we intend to extend the footprint of coverage in every customer that we are currently engaged. For instance, we recently announced a deal in the Middle East oil and gas sector, and I'm very pleased to let you know that we've already implemented and the system is in production. And that gives us an opportunity to, make it showcase those implementations and spread the footprint to other parts of the same organization or different sites of the same organization. Coming to identity analytics, ID Central, we have onboarded customers both from Indonesia and India, the two markets that we are currently focused on. After the product market fit, we have identified on two areas. One is the eKYC, followed by the transaction monitoring. These are the two specific aspects that we are focusing on ID Central. And the target segments here are crypto exchanges, e-wallets, lending, gaming, banks, NBFCs, brokerage trading, payment gateways, etc. Primarily the new age e-commerce based organizations. In India particularly, we are seeing very good transactions, and we have several POCs that we are currently driving at this point in time. Now, coming to the addition of key talents, we have onboarded Asha Subramanian as the new head of HR. She will be spearheading our talent acquisition and management and will bring her rich experience from organizations like Goibibo, where she was part of the journey right from the startup to when they achieved scale. We intend to energize the team in the new hybrid mode of working, which has become mainstream. We have our offices open for those who want to come and work from office. So pretty much it's a hybrid situation of working that we have at this point in time. Now, even though the Q1 revenues were slightly lower than the normal trend of Q1 that we are having for years, we are confident that as we move forward, we will bring back the growth that we have set as an expectation in the previous calls. Also, as we move forward, we stand strong in our vision to make the digital world trustworthy and therefore unlocking possibilities for all our stakeholders. We will continue to work hard, innovate, and invest in the right technologies to overcome challenges and deliver value to our customers, investors, and Subexians. With that briefing, I would probably now hand it over to the operator to go through the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, you may press star and 1 at this time. The first question is from the line of Paras from SR Capital. Please go ahead.
Yeah, hi. So I have two quick questions. So first one is, how many new customers are translated to revenue during Q1, and what is the quantum in top line and EBITDA? And second,
Paras, can you just repeat the question? I did not get the first part of the question. Can you just repeat it, please?
Okay. So my question is, how many new customers have translated to revenue during the Q1? And what is the quantum in top line and EBITDA, or the percentage share in revenue and EBITDA of the new customers in Q1?
Okay. Just based on our business that we have about 75% of our business, both new and old, come from our existing customers. Because we have almost 200 customers, so primarily we generate more revenue for the same customers. Having said that, during the course of this quarter, we have added 3 new logos in addition to getting additional business from the existing customers. We have added 3 new logos, which are net new customer additions. I don't have a view of what is a specific, revenue that added, because some of these revenues will come in subsequent quarters as we start and execute on these projects. So that's we don't have a particular tracking of what is a new customer's booking. Typically, the revenue will start coming from the subsequent quarters, because this quarter we will make the booking, and then once we have the data gathering, etc., starting the project. Typically, the revenues from this quarter OI will start coming in subsequent quarters.
Okay. So thank you for your answer. And for my continuing second question would be on the similar line. So for FY22 estimates, so how many new customers you will be onboarding? Do you have any estimate, and what would be the share or
Okay. So let me qualify one thing. So I should have qualified that. So when I talked about adding 3 new logos, this is for our core products. If you look at our new product range, which is primarily the IoT security and ID Central, then all the customers that we have added are a new customer. It's a SaaS-based thing, so I guess new customer addition there may not be the right metric there, because every customer is a new customer that we are adding. Now, we do not have a measure of how many new customers that we have to add, because it is a nature of how the projects and the budgets available for each of the customers. But having said that, our intent is that at least we should add in our core business. If we can add anywhere close to 7 to 8 new logos, it'll be a very good scenario, considering the fact that it's a mature segment, and there I think it's primarily about most of the operators are customers for our one range of product or another. On the new areas, it's a SaaS-based thing, and these are very, very small MRC numbers which we are talking about, and there probably the addition of customers will be in hundreds. So therefore, that's again not a new metric, the metric that at this point in time we are looking at adding. We are looking at MRC addition for the new areas, and for the old areas, as I said, if you get about 7 to 8 customers, it will be a very good situation.
Okay. And do you have any quantum of EBITDA share or revenue share for the new segments or the customers for FY22 estimated?
It will be on the same margin profile. So we have set the expectation that our overall EBITDA on a steady state basis will be about around 22% on the steady state basis, and we expect the same from new customers as well. There's not too much of a variation between old and new customers, because all these are new projects. I mean, from the existing customers, for example, if BT is a very large customer for us, and if there is a new project, now I think that margin profile will be pretty much similar to a brand new logo that we are acquiring.
Okay. Thank you. And my last question. So when are the contracts signed with Telefonica and Snowflake are expected to be started?
The contracts that we have started with Telefonica, it's already the execution has started. Snowflake is a partnership where we have announced a partnership where we are building, we are connected, we are integrating the products, and we have started. The GTM will start very soon. So at this point in time, we are integrating both the products, and some limited GTMs have happened, but we expect the GTMs to happen in the subsequent months when the integration of the two products are completed.
Okay. Telefonica's revenue has been reflected in the Q1?
some part of the revenue. These are very large projects. We have it's a multiple country project. So one country we have started, and I would want to believe that some small revenue from those projects. It's a project that is running into multiple countries, and one country we have started the project in quarter one.
Okay, that's it. Thank you. That's it from my side.
Thank you.
Thank you. We would request participants to limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Nilesh Shah from Envision Capital. Please go ahead.
Yeah. Congratulations to the team for the journey so far. My question is around given a performance for the first quarter and given that, we're expecting double-digit growth for this financial year, are we confident about our growth for the next 3 quarters, given that now the run rate, in a way, what we need to achieve our guidance or expectation goes up quite significantly? I mean, just very ballpark calculation suggests that we'll have to grow 18% year on year for the next 3 quarters to basically even achieve a very low double-digit kind of a growth rate. And if I were to kind of look at the order backlog, which is there of about $43-44 million, which is to be executed over the next 12 months, and prorated for 3 quarters, even then the ask goes up quite substantially versus the kind of order backlog that we have. So basically, I just want to understand if our confidence in still being able to register a double-digit growth rate for the financial year, does that still hold?
Yeah. So the answer is yes. We are still holding that double-digit growth. And talking about the backlog, Nilesh, our plan is that by the end of quarter 2, that is by end of September, we will have all the backlog that is required for us to achieve that double-digit growth. Subsequently, what the focus will have to shift to the execution of these contracts. So we have also built the capacity that is required to drive the additional revenues that is required for us to get to that growth level. So based on the current situation backlog that we added in Q1 and what we expect to add in Q2, we will be in a comfortable position with the backlog to drive the double-digit revenue growth that we had referred to, Nilesh.
Great. The second question which I have is around, this quarter we've experienced a sharp increase in our employee cost. And this is notwithstanding the fact that we've had some write back in provision for the sales commissions and all of that. So I just have 2 questions. One is, why such a big increase in employee cost for this quarter? And I'm comparing this on a year-on-year basis. And the second is that given that this is just the start of the financial year, this is the first quarter, how come we have provisions left which have to be written back? I presume that in the first quarter of the financial year, you would not have excess provisions on that front. So I just wanted to understand from an accounting point of view as well.
Sure. So let me address the first one, and then I'll hand it over to Venki to address that reversal part. With respect to the addition of the team, this has been done primarily, as I told you, to increase the capacity so that we can drive higher quarterly revenues. You know that we have, as per the new accounting regulation, we need to complete the revenue recognition is based on the POC and the percentage completion of the project, which again have a bearing on how many resources are there for us to deliver these backlog. So considering the fact that we have to drive higher quarterly revenues to get to the growth that we are expecting, we have to add more capacity to the delivery teams. So this is one part. The significant part of the addition has gone to the delivery side. We also have had some addition into the new areas where we are scaling up, particularly in the sales and marketing areas for IoT and OT security, and that again is coming in. This addition has happened in the sales and business development in North America, the Middle East, and Europe. So therefore, that again contributed into the increase in the employee cost. Venki, you want to take that query on the reversals, Venki? Hello, Venki, we are not hearing you.
Hi, Nilesh. The reason for the higher reversal in the current quarter is because we do the true-up for the financial year, last financial year payouts in terms of what is the actual commission payouts in the first quarter. While a lot of it is estimated into the quarter, but there are some
some portions of the components of the incentive payouts, which is linked to a number of other factors, which is not completely accurately available as we close the year. So those true-ups happen in the current quarter, and that has led to the reversals which you're seeing in the current quarter. They are not related to the current quarter. These are some parts relating to the last financial year that got reversed in the current quarter.
So Venki, would this kind of even go on in the future, or is it like kind of going through a learning curve, where we would be able to reasonably accurately be able to kind of, in a way, ensure that on a every quarterly basis we have the right employee expenses, or this is something which will basically continue even going forward?
No. It will see. There will be some bit of reversals which will be there depending on how the provisions happen. Because if you look at in our business, unlike a typical services model, a lot of our sales commissions are payable. People have the ability to earn those commissions through the year, which means somebody misses a target for the quarter, and then they catch up in the next quarter. They have the ability to earn the commissions if they missed out in the subsequent quarter, if they catch up and they're able to close out orders. Because the nature of the business is such that you have orders which are bulky and they come in as and when closures happen. So, and we do provide the opportunity for people to earn them back even as the year progresses. To that extent, so we do hold back provisions depending on how we see visibility of closures which are happening for the sales guys. So that leads to a little bit of such plus minuses happening. But yes, we are also continuously looking at our processes to see how do we improve this further and keep such reversals to the minimum.
Yeah, because Venki, what happens is if I just look at the reversals in provisions for the last 2 quarters, March and June, they add up close to about 13 crores, which on a revenue base of 373 crores, that works out to kind of in excess of 3.5% of the revenues, I mean, that's quite significantly because it has some implications in terms of margins, and it just creates volatility in the margins. So I think as investors, it becomes very difficult for us to, every quarter kind of look at and track how the margins are moving. So maybe it's just a suggestion that if you can do something about this and ensure
that's a valid suggestion, and that's something which we are aware of, and we are working to improve that further as well.
Great, Venki. Thanks, Venki. Thanks, Vinod. All the best.
Thank you. The next question is from the line of Amish Kanani from JM Financial Services. Please go ahead.
Yeah, hi, sir. Sir, the question is, we have shared the contract backlog, which is 111 million, and 12 months being 42 million. And, Nilesh also, alluded to the fact that, now the ask rate is higher, which is reflected partly in the backlog of orders. The question is, sir, that even the total contracted backlog also is not easy. So the question is there a traction that we are seeing in the new, products that we have launched, Horizon 2 and 3? What are the typical, the addressable, the typical ticket size that we are getting, because it's not reflecting even in the total order backlog. And 2, you say that the implementation cycle is slightly shorter. So, if you can give us some sense of, what are the, say, giving an example of oil gas contract that we had, how are we, getting it? And you also mentioned it's ARR based. So, if you can elaborate a bit there. And in that context, our expectations of $20 million from the new revenue, new Horizon products, does it look on track, or maybe we'll have a surprise on the upside? Thanks.
Yeah. So first on the contracted backlog, I think we had a reasonable Q1 when it comes from a order booking perspective. It was, it is significantly higher than the normal Q1 that if I look at the last 3-4 years, the Q1 booking has been, probably one of the best Q1s that we had from an order booking perspective. But having said that, again, just like the revenue, the Q2 is, Q3 and Q4, there's a significant skew upwards when it comes to order booking as well. So, so I think the good part is that we have replenished all the things that we have used up. And as I said, by the end of Q2, we expect to have all the backlog that is required for us to drive revenues for this financial year. Now, coming back to your question on the Horizon 2 and Horizon 3. Now, there are 2 products, security and security product, which is the Horizon 2, and the Horizon 3 is kind of the identity analytics. If you look at identity analytics, the average MRC that we are talking about for eKYC will be around 500 to 1,000. I'm just talking about average, which is broad basing around a large set of customers. The average will be about 500 to 100 to $1,000 per month, and that will go up to $5,000 per month once we add the transaction monitoring. So but the number of customers will be several. I mean, even if you look at customers as again, core, we have an addressable market of 700 to 800 customers, but here the addressable market will be in thousands, right? And maybe in India itself, if you take that, there will be at least 100,000 customers that will require this identity analytics. When it comes to our IoT security, there are two segments that we are catering to. One is the enterprise segment, which is again the SaaS-based things, which we are expecting an average revenue about $7,500 to about $10,000 per month is the average revenue that we are expecting from one site, one location. Again, this can vary differently based on the number of elements that we are covering. So that's one segment that we are covering. And then you have the large governmental and the large enterprise segment where it will be in multi-million dollars. So currently where we are addressing some of the contracts that we have won are large conglomerates or large MNCs which have got multiple site, multiple country installations. And currently our focus is to implement the first site, like I mentioned in the Middle East oil and gas situation. We have take another example. We have implemented manufacturing setup in Asia, in APAC region, and that's a global company, and we are now expanding it to the next country. So I guess that the new areas are ticket size, and the MRC is you get the range of MRC, but it is number of customers are significantly more catered through both channels, distributors, and things like that. So the business is very different, but there is a part of the business which is appeals to the large enterprises as well, similar to the telcos, etc. And there probably the profile will be something similar to what we are used to in our core area. But the real growth and the number of customers we are expecting from smaller customers paying smaller MRCs, but a large number of ones similar to the SaaS-based companies that are used to. So to answer your question on the 15 to 20 million ARR, we are still confident based on the current thing that we will get there.
Thanks, sir. And sir, the second part of the question is, you mentioned EBITDA margin more in the range of 2022, but that is more of a Q1, whereas annual last 2 years average has been more like 25-26%. So are we being conservative there? Or based on the cost that we have kind of upfronted mainly on the employee side, and also maybe expected costs that might incur again when the people start traveling, we are kind of guiding that range of margin. And also
it is primarily the travel and the marketing, which we expect that will slowly pick up, because last year we did not have those two expenses. So marketing for sure is started picking up, and traveling we expect that from the December time. I mean, Europe and US, people have already started traveling, but I guess the travel will start picking up. So that's why I mentioned the steady state will be around 22%.
And another point is the investments in the newer areas continue, right? I think those will take some time to ramp up. So that will also impact the overall margins, because we're talking of company level margins here when you say 2022.
That's correct. So when we talk about that margin, we have factored in the investments that we are currently planned for the new areas as well.
Sure. And sir, if you can share also, maybe if not now, late in the call, total contracted backlog as of this year, last year, this time. That will be helpful. Thanks.
Okay.
So we don't have that ready right now. We'll come back to you, because we've been originally reporting OI numbers, and we have moved away from that to start presenting the total contract value numbers. So we'll have to come back to you separately on what it was last year.
Yeah.
So just while we were not reporting that OI backlog, but if you look at the comparable number, we talked about the OI backlog last year. It was around we have almost doubled from whatever it was last year. So from a Q1 OI perspective, but again, I don't want you to confuse with giving another number. But the backlog is much more meaningful. So therefore, we have started reporting in the backlog side.
Okay, I got it. Thanks a lot, and all the best.
Thank you.
Thank you. We would request participants to please limit your question to 2 at a time. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Thanks for the opportunity. Hi, Vinod and Pinky. Just a question on the Horizon 2 and Horizon 3 products. What is our MRR or ARR at the end of the June quarter?
So, Rajesh, we drove an overall revenue of about 500,000, just under 500,000 is what we drove. I don't have the breakup from an ARR, MRR perspective, but I think bulk of the revenues come from that range. But about 500,000 is what we drove from that's happening in Q1, Rajesh.
So 500,000 is right. This is not the.
Sorry to interrupt you, Mr. Rajesh. Your voice is breaking up, so we cannot hear you very clearly.
Is it?
No, sir. It is still breaking. I would just request you to please check your phone line and rejoin the queue. In the meanwhile, we'll move to the next question, which is from the line of Deepak Chupani from Rate Capital. Please go ahead.
Hi, sir. Thanks for this opportunity. Would management like to give any insight on the revenue expansion for FY23? I know the management has guided in teens for this year, but any insight for FY23?
No, I think at this point in time we do not want to give anything. So our focus is on producing past this year, get to that growth that we have suggested. But I guess overall, as I said, both particularly on the new areas, we are still want to say that within the 3 years time frame, we definitely will get to this 15-20 million ARR that we are talking about.
Okay. Thank you. Thank you, sir.
We'll take the next question, Margaret.
Speaking with has put your call on hold. Please stay on the line. आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे.
Sorry about that. We'll move to the next question, which is from the line of Ashik Koti, an individual investor. Please go ahead. Ashik Koti, an individual investor, your line is unmuted. Please go ahead with your question. There seems to be no response.
Good afternoon. I have 2 questions. One is with regards to the subsidiaries. We have listed approximately around 7-8 subsidiaries. Can we get the performance breakup of this subsidiaries and how much they are actually contributing on the revenue as well as the profitability? That is one. Second, earlier also I had asked for like each new area we are venturing into. Who are the top players in the same field in the world as well as within India?
Okay, so actually on the subsidiary performance, I think we have a number of subsidiaries, and of which Subex UK is a larger one among the subsidiaries. Other ones are small ones. So a significant portion of our business comes from the LLPs, and that is anyway part of the consolidated numbers which we report. And if you look at our annual report for last year, we will have the breakup of how each of these subsidiaries have performed. So on a quarterly basis, we don't disclose how each of these subsidiaries perform because it is a lot of work to compile and present it at that level. So on an annual basis, you can look at our annual report and you can have that information.
Okay.
Possibly I did not figure out.
Yeah.
Okay. So when it coming to the competition, when it comes to IoT, OT security, we have, particularly on the OT security, we have 2 companies. One is Clarity, and another company is Nasomi. Both of them are US-based organizations that are competing with us globally. We do not have any local competition per se. When it comes to the identity analytics, there are a lot of solutions, but which is broadly in this space, smaller competitions doing some fraud management, things like that, but specifically offering eKYC and the transaction monitoring, we don't see that as yet. But we are expecting as this is early days for us. As we start getting it, we will definitely find some competition and we will report that. At this point in time, I cannot name one global competitor that we have around this product lines at this point in time.
Hello?
Yeah.
Within India, sir?
Within India, we don't have anybody from. I mean, these competitors play in Indian market as well, but we don't have anybody from India. No Indian company is competing with us. That's the point that I was trying to make. These are global companies which will compete globally, like we are competing globally. These companies are also competing globally.
Infotech, their blog, and I think they are all already into cybersecurity. So I was wondering.
No, we are not in the cyber sector. Our focus is OT, operational technology security. So all the cyber security, there are hundreds of players in the cyber security space, which is IT security, but we are focused on OT, operational technology security, which is important for critical infrastructure, industry 4.0, IoT, and things like that. And that is a very specialized space which is evolving within the overall domain of cybersecurity. And there are the players that I listed, they are the more players. Now, there might be a lot of service providers offering these services, and they will work with one of the OEMs like ourselves to provide the technology. They might provide it as a security solution underpinning one of this technology or IP from one of the OEMs like ourselves.
Thank you. I would request Mr. Koti to rejoin the queue for follow-up questions. The next question is from the line of Mahesh Kumar, an individual investor. Please go ahead.
Yes. Good afternoon. I have two questions. First question is, why we are not increasing our market share in our core telecom business so that we can reduce the competition and increase the margin. Second, we are announcing multiple partnerships or joint ventures. What is contribution of those joint ventures in terms of revenue, or what POCs we have done? Recently, we have done announcement of Skylab. So what is happening on that? And like smart city security that we have announced 2 years back. So what is progress? Are we getting any some smart city orders based on that reference? Thank you.
Okay. First, on the question of increasing the core, definitely we are competing well in the core. Obviously, we can appreciate the fact that post this market, the pandemic situation, most of our telco customers have been quite, they have increased the rigor on which they are spending. There's a lot of cost optimization that they are looking at. Having said that, wherever there is an opportunity in our core areas, we are competing, and we do have plans to expand into areas that into our competition accounts and things like that. So that's a constant area that we are focused on. Coming to the joint ventures and what we are doing, as I told you, that joint ventures where we are, like you talked about Skylab. Through Skylab, we have already secured the maritime, the deployment in the shipping, the shipping industry has been done through this Skylabs. We have also deploying a 5G operations in Singapore through them. So there are many things that are happening through the partnerships by and large. And please also understand that this is the only way we can increase the reach. So partners and distributors are a key aspect, and many of them we are doing several POCs along with our partners as well. So I think we are very, very happy with some of this, the way we have gone about it with the GTM along with the partners. Otherwise, we would have never reached many of the segments that we are currently engaged with if we had tried to approach it directly.
What happened to the smart city security? We have done one implementation in USA.
Yeah.
Any follow-up order after that?
Yeah. So the smart city implementation, we have done one in USA, and post that, we had to get an approval from an association so that we will be approved to deploy in any of those. We can or any of the other counties can approve that. We have recently got that. Post that, there have been the priorities have been. The overall the investment from smart cities around this area has been quite muted, as most of the the city or government level funds have gone into COVID related things. With the recent cyber attacks, there has been a renewed effort, starting with the critical infra. So currently the US government has requested the critical infra cyber security to be strengthened. We expect that post that it will come up to the city level administrations, and there we will see an increased opportunity. So we are in touch with them, but we have not been able to secure because we had to wait for the approval to come for us to directly pitch it. The first one was we were a part of a consortium and we got that thing. But to answer your question, that is a very satisfied customer and it's a good reference for us in the city of Arizona. So we hope that we will come back to you with some progress there in the coming months.
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please submit a question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Atish Bhajic, an individual investor. Please go ahead.
Hello. Yeah, am I audible?
Yes.
Okay, good afternoon all. And to be very specific, on the quarterly results announced yesterday, as per the earlier guidances, our company was to, deliver double-digit growth. But results certainly, don't reflect the same. So can you please share the view on how we are going to really, improve ahead also, and simultaneously what actually went, incorrect in the last quarter, basically?
Okay. The first point is that, when you talk about the double-digit growth, my request, as we have been talking in the earlier analyst call also, our business at this point in time should be monitored on a year-on-year basis, because even today the bulk of our business is coming from the core areas, which has got the lumpiness based on when we secure the contract and when we start implementing it. So there is a lumpiness that happens from quarter on quarter. That is something which you have seen. If you look at our quarterly revenues, that is kind of quite evident. And we expect that will go away as we move into more and more subscription-based business. But at this point in time, even excess of 95% of the business comes from the traditional mode of business. Second, I have already clarified in my earlier briefing, the primary reason why probably our revenues came down is because of the concerns that we had with respect to initiating and delivering the projects on account of almost about 150 people down with COVID during the April-May timeframe, where we had to, talk to our customers and secure their support in delaying the projects, etc., because we didn't have an ability to execute. The people were down and they were out of action. So that's a primary reason. But as I clarified to an earlier question of Nilesh, we are quite confident that we will bring back the revenues to meet the growth forecast that we have already set the expectation in the last call.
Noted. Thanks. Yes.
Thank you. The next question is from the line of Jeevan, an individual investor. Please go ahead. Jeevan, your line is unmuted. Please go ahead with your question.
Hi guys, this is Jeevan, individual investor. So I have one question with management of Subex. So we all know that this now due to pandemic, we almost 70 to 80% industries are online, right? So, and on the other hand, this online security related concern is increased, right? So So how we are, dealing with this, and what is the strategy behind this, and strengthening our company, role here, and is there anything which we are, asking to come on board and take it forward, or we are continue with current what do we have now? So because this is the right time to, we have the demand, and we have to grab as much we can in market share. So what is the views here?
Yeah. So I think your point is primarily on the cyber side of it, cyber security side of it.
I'm talking about actually on all frame, everything, not cyber security, with IoT security or anything which data related or something. I guess we are dealing in that also.
Yeah. So I think we are that's what there are two distinct areas, right? Core areas, it's a traditional products for telcos, and there I guess what we are seeing is that all the existing projects that were put on hold, we are seeing the emergence of it and some new projects, and that's why I told you the acquisition of three new customers on the core area is also very significant, because one is to close the projects that were put on hold and initiated before the lockdown and the pandemic, etc. But getting new logos, which we initiated during the course of this pandemic, that is even significant, because we had to learn the whole way of engaging completely remotely and winning the new deal, right? So that's significant. To your point of the security side of these things, we are focused on two specific areas at this point of time. OT security, that is operational technology, which is relevant to critical infra industries, etc., and IoT security. What we are seeing as the major let's say requirement from the market at this point in time is on the OT side. Why? Because OT is where I guess we are seeing a lot of attacks that are happening, and therefore there is an urgent need, and they wanted to also, because of their needs to move into a work from home mode for the industries, etc., they will have to also strengthen the security, which wasn't the case earlier. So that's where we are our current focus on. With IoT security, by and large, there have been a delay in the rollout of IoT because of the field issues, because most of the IoT deployments from the operators, etc., will require people to go on the ground and install IoT devices, etc. So there has been a delay because of lockdown and things like that. So therefore, as and when that picks up, we see the security will come in. The requirement will go hand in hand with when the IoT rollouts happen. But our current focus is on the industrial side, where we are seeing an increased demand, and precisely like what you mentioned, that's what we are trying to take advantage of as we talk.
Yeah, because I'm in this IT industry from last 17 years, so I have not seen the investment like this from any company in security frame area. So this is the right opportunity, and we should go for gold medal, not for the bronze one. So this is because we will not get the this time again in future. So
absolutely agree. Yeah.
Yeah.
Yeah. Agree with you. Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, I hope I'm audible now.
Yes, Rajesh. We can hear you.
Okay. Hi, Vinod. So I was just talking about understanding the MRR or ARR for the Horizon 2 and Horizon 3 products, and I heard you say that the revenue was $500,000. So you're saying in this quarter we got $500,000 of revenue from the let's say the backlog we had at the beginning of the quarter. Is that sort of what you're saying?
Yeah, and some new. I mean, during the course of this quarter, we also initiated some commercial engagements with the customer. But Rajesh, as I told you, the average addition for our ID Central customer is about, as I told you, for the eKYC is about 500 to 1,000, and for the transaction monitoring is about $5,000 on average, and for the IoT OT security per site, per small average site will be about $7,500 to $10,000 per month. So I guess that so we from our run rate basis, $500,000 is much significantly higher than our what we have done last year. But again, as we go along, I think we will add every month. MRR is going to add on top of it, and you understand how the MRR works. So that is where we will start providing details going forward. But overall, from the new areas, we drove about $500,000 in this quarter.
Okay, understood. And last year we were talking about ramping up these two groups to, let's say, 15-20 million of revenue in the next 2-3 years. So if you can just comment on where we are on that journey.
You see, Rajesh, like things of, so the scale at which this can grow is enormous, because as I told you, the example that I gave is that one of the multinational that we are working with, we have just installed in the one plant in a APAC country, and they are a global company, and the plan is to expand to all the countries where they have options. And we are talking about in another 60-70 countries, and each country is having 3 or 4 the factories they have. So I guess just about everywhere we are talking about the scale is similar. We start small. Once we prove the value, it gets expanded to other areas. So currently our focus is on to close on strategic partnerships and key customers, key MNCs that we are working with. And in between, there are some large deals on the large enterprise and the governmental side that could be very, very large deals, similar to or even larger than our core business deals that we are typically talking about. So put together, as we stand today, we are still bullish that we will get to that projection that we were talking about, Rajesh.
Oh, wonderful, wonderful. And just one housekeeping question for Venki. I missed the number for the provision that you wrote back in this quarter in the employees' expenses. What was that number?
7.86 crores.
Okay, all right. Thank you. That's all I have. All the best, guys.
Thank you. Thank you.
Thank you. The next question is from the line of Vineet Sagar from Venture Garage. Please go ahead.
Yeah, hi. Thanks. Good afternoon. It seems that all of us are excited about the opportunity in the Horizon 2 and Horizon 3 areas, because those are the growth areas for the business. Now, you also mentioned that for the IoT security and our SaaS products, the ticket sizes could be low, but the potential customer base is very, very large, right? Now, what I'm trying to understand is how scalable is our model in terms of, selling to our clients, deploying at our client location, and being able to service this, and how do we intend to squeeze these timelines in order to create a scalable approach?
So in these new areas, the deployment cycles are much, much shorter. So for example, in the case of IoT security, we are talking about maybe about 4 weeks, 5 weeks implementation, as against 9 to 12 months on our core areas. And when it comes to ID Central, identity analytics, it will be even much shorter. Once we kind of get to a scale, we are expecting that we should be able to turn up the service in under 1 week or maybe 10 days. Now, the reason why it is there, because both of them are SaaS-based offering, and it's all API-based things. So we just drop the API, or they just connect up to the API and things go live. So we have factored in, and both in the engineering side of it. At this point in time, our focus is to get the customers and ensure that all the things that the customer wants, and all the customers from an integration point, everything is working well. Once we get that part clear, then we'll figure out how to scale that thing. At this point in time, we fully understand how that whole thing works. Now, so from a deployment perspective, that might be we don't have a challenge based on the architecture, etc. Where we will have a challenge will be on the GTM side, because today because it's a multi-vertical and this is applicable to just about every segment that you're talking about. That will be a challenge for us to look at identifying the segment to go after, identifying the partners to go after new segments, and that is where probably we will have to do a lot more going forward. Once we get the customers, I think the scalability is something which we have managed for our telco customers as well. From a pure engineering standpoint, we are quite confident. GTM into the other verticals is where probably we will have to figure out many more things as we go along.
Okay, thanks. That is helpful. All the best.
Thank you.
Thank you. The next question is from the line of Rajkumar Ojha, an individual investor. Please go ahead.
Sir, good afternoon. Sir, my question is regarding India. Besides Core 1, have we penetrated in Horizon 2 and Horizon 3 in India? Because the sales do not reflect our very strong presence in India. Do we have any plan to jack up the investment and so that the sales come up?
Yeah. So I think in the Horizon 2 and Horizon 3, we have definitely started focusing on India. ID Central is something which we started about 3 months back with a focus in India. We have onboarded the first 2 customers on board, and we have a very, very strong pipeline from India. When it comes to IoT, IoT OT security as well, we have brought in the team, we have invested, and we have a team on specific team focused on the Indian market. And we have also seen very good pipeline generation and POCs happening at this thing. So for both sort of IoT OT security and the ID Central, India is a focused market, and we will see a lot more contribution coming from the Indian market from an overall our revenue standpoint going forward.
Thank you, sir.
Thank you. The next question is from the line of Amit Mishra, an individual investor. Please go ahead.
Hello. Good day, Vinod and Venki. Just one question. What was the cash flow for quarter 1 and the cash in books? It's missing from the presentation we had in previous quarters, Q2, Q3, Q4, these numbers mentioned. So if you can just let me know, please.
Yeah. So we have about 145 crores of cash in the balance in the end of June 30th, 2021. And I think our operating cash flows have been strong, and DSO is about 89 days. I'll check what happened to that cash number. I thought it's still there. If you look at slide number, I'll just tell you the number. If you go to slide number...
It gives FY21 number, but not for Q1, if I'm not...
Oh, okay. Fair point. We will update that in the coming quarters presentation.
Okay. And other thing was in the presentation. I noticed, last year in Q1, you provided a very good table, USD basis for guidance for the full year, and you had all the revenue, EBITDA, and what you're going to achieve, in addition to the order backlog. So can you reinstate that table? It's quite a good table for us to follow. It was in dollar terms. Do you remember?
Yeah, I know what you're referring to, but I think that was a one-off thing which was intended for a different purpose. But I think we, as you know, we've been giving a broader guidance in terms of our revenue numbers of what we see as growth for the coming year. And we've also been guiding a range in terms of how our profitabilities are going to be. I think given the nature of the business and the way this year has panned out, or the last year for that matter with the pandemic, we just wanted to get a little more stability and predictability to the business, and then we will start providing more detailed predictions on the lines you've asked for. So at this point in time, we'll kind of continue this current model of giving a range in terms of how we see the full year likely to be, and of course, range in terms of margins for the full year.
Vinod, can you please give some color on, like we talked before about defense opportunity in India. Are we making, is it really a good area where we can make some difference, or it's just you're testing the waters?
Okay, look, I think we are looking at the industries very specifically, and some large governmental things where it's definitely there, but we are not betting on that. We do have a team who's focused on there, but the iffiness of that, the dependability. I mean, there are a lot of dependencies there. So we are not betting our farm on that segment, on the governmental segment. But having said that, we are participating in a few areas, few tenders for us to test the waters. Our focus is more on the industries, on the enterprise segment, which we are, focused on the 3 markets of India, Middle East, and North America.
Thank you. We will take the last question, which is from the line of Mahesh Kumar, an individual investor. Please go ahead.
Yeah, my question is to Vinod Kumar. In India, two groups are working on building indigenous 5G technology. One is driven by Reliance Jio and other is driven by Tata Group plus Bharti Airtel as their probable customer. So is Subex working with any of them to build indigenous 5G technology? Because we have a tie-up for Open RAN.
Yeah. So at this point in time, we are in discussions with them, but I wouldn't call it that we have any tie-up, etc. Our focus is to participate more on the Open RAN and contribute there, so that once any stack that is developed based on the Open RAN, they can adopt our components very, very easily. So that's our approach currently, that we will fully support the Open RAN stack, so that anybody who is developing either themselves or with a combination of components, they are developing their stack and use our products, our IPs, Mahesh.
Okay. And in industrial IoT, are you exploring tie-up with some industrial OT technology companies in US?
We are talking to. Look, I think there are two ways to it. So there are large OT companies like Schneider, ABBs, etc. They are large industrial companies. They have their own security, and to an extent, we are sort of competing with them in that sense, because customers are not happy with providing the security from them. But there is a segment which is just below them, which is also very prominent and very, very widely spread. We are working with that OEM, that segment of OEMs, to provide security to them directly as a part of their deployment or post their deployment. So to answer your question, with certain segments of the large OT providers, we are working with.
Okay, thank you, and all the best for the remaining of the year.
Thank you.
Thank you, Mahesh.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to the management for closing comments.
Okay, so we thank you all for taking time for attending this call and your continued interest in Subex. You can always reach out to us at investorrelations@subex.com if you need any further clarifications or if you have any other suggestions. Thank you again, and stay safe and take care.
Thank you.
Thank you. On behalf of Subex Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.